Welcome to the podcast that will teach you how to successfully invest in and build steady streams of passive income from the highly lucrative niche of mobile home park investing. Veteran real estate investors Kevin Bupp and Charles Dehart from Mobile Home Park Academy will personally share with you the valuable lessons they've learned along their journey as mobile home park investors, so that you too can learn how to build massive cash flow and huge profits from this extremely lucrative niche. So without further ado, let's welcome your hosts for today's show, Kevin Bupp and Charles Dehart.
Hey guys, Kevin Bupp here, and I wanted to just take a brief moment before we got on with the show and provide you with somewhat of a primer of what you can expect on this episode. Now, first and foremost, I think that you'll be pleasantly surprised that I was able to persuade my business partner, Brian Spear, to join me here today. And so, for those of you that don't know Brian, I think you'll thoroughly enjoy his presence here. Brian brings a wealth of knowledge to the space, and his insights offer, a very fresh perspective on our niche. And, you guys get to hear me talk week in, week out on the merits of the space and how great this industry is. But now you'll have the chance to dive deep into Brian's head and see what he's thinking. And aside from that, Brian and I go in depth on the acquisition strategies that are working for our team and which have allowed us to continually find high quality off market deals even in this competitive landscape. And I'll actually give you guys a brief run through of the 3 deals that we currently have in contract today, along with how we found them and what our value add strategy is on each. Brian and I also will give you a run through of our most recent mobile home park fund, which we just launched a few short weeks ago. Having a better understanding of our business structure here at Sunrise Capital Investors will, I think, be helpful to both those who are seeking to actively grow their own mobile home park portfolio, as well as those who might be interested in taking a more passive approach to this business and partnering with an experienced operator. And so I think there'll be a lot of value received from us walking through our exact business model. And then lastly, we spend a few minutes celebrating our first of many acquisitions in the parking lot sector, along with a high-level overview of why we love this niche and why we feel it's an untapped opportunity. Now, I know that this is a mobile home park investing show, but again, another part of our business, which we've just expanded into, are parking assets. And so I thought that you guys might enjoy, a fresh perspective on another asset class. And I'll toot my horn a little bit by saying that we were able to acquire this parking lot in an ultra premium location at what ends up being an unlevered 9.5% cap rate. So I'm thinking that might perk your ears up a little bit and have you listen in as we go through the parking lot section. And so with that, guys, there's my primer. Enjoy the show. Welcome, guys and gals, to the Mobile Home Park Investing Weekly Podcast, where we'll provide all the information that you need to know to successfully locate, negotiate, close on, and make huge profits from the lucrative niche of mobile home park investing. I'm your host, Kevin Bupp, along with my co-host and business partner, Brian Spear. Brian, how's it going, buddy?
Life is good, Kev. Never had a bad day in my life. That's what I always say. As you guys know, 2020 has been a crazy year, but we've been able to kind of social distance from the beach for the majority of it. So life is good, no complaints. What about yourself? How you doing?
Yeah, no, I like to call, instead of calling 2020 a crazy year, I like to refer to it as a unique year. It will go down in my mind as a unique year, and we'll move on and we'll keep on chugging along as we did in the past, right? So, but hopefully, as we look in the rearview mirror, we just see it as a little blip on the radar screen, and we get back to somewhat of a normal here as we move forward in life. But yeah, no, I'm glad to say that we've been able to spend our time down here in Florida during this last 6-7 months of uniqueness, and it's been a fun place to be with the beaches and what have you. With that being said, man, I'm excited to have you here, dude. It's not often I can kind of get you out of your work mode, your grind mode, and get you on this show. I beg you a lot of times, but a lot of times you just tell me no, man, you turn me down. So I'm excited to have you here, and it's going to make today a very, very different type of show. Again, persuaded Brian to be here, and it's always fun to have him because he brings a very unique perspective, a very different perspective than my own, which you guys hear all the time. So it's going to be fun to have him here, and you guys hear me day in, day out, tout all the benefits of investing in mobile home parks. You hear me bring others on the show that tout the benefits of investing in mobile home parks. But now we're going to turn the table on Brian and see what he has to say about mobile home parks. I think it's going to be a lot of fun. And, additionally, we've had a lot of activity kind of happening behind the scenes here at Sunrise over the last 6 and 7 months. And so I also thought it'd be fun to get everyone up to speed on some of the exciting initiatives that we've been working on. And so at this time, I'm going to turn the tables, man. Brian, you're in the hot seat now, man. We're going to be interviewing you today for the most part. And so again, everyone knows why I love mobile home parks. And so I'm going to ask you the question, why mobile home parks, man? Why do you like this asset class so much?
Yeah, I mean, great stuff, right? Everybody that's been listening to the Mobile Home Park Investing podcast for years knows that we basically turn our business model inside out and kind of give you guys the nuts and bolts and get really granular on how to be active in this asset class. But we don't often talk about 10,000 foot view. Sometimes it's nice to get above the fray. Sometimes you can't see the forest through the trees. So let's talk 10,000 foot view, high level, why mobile home parks for those that really don't know. I mean, I would say this, starting with this, some of the best investors of all time have a large chunk of capital invested in this asset class. I mean, if I have seen further than others, it is only because I have stood on the shoulders of giants. Love that quote. And you might not know this, but Warren Buffett loves mobile home parks. He's actually the biggest investor in the space. He's the biggest manufacturer of mobile homes through Clayton Homes. He is the biggest financier of mobile homes through his subsidiary 21st Mortgage, and he's a top 10 lender for financing on mobile home parks through his subsidiary Berkadia, which is obviously a subsidiary of Berkshire Hathaway. I'm a huge Warren Buffett fan and just love his investment philosophy, generally speaking. I think our investment philosophy has kind of evolved in the same way that his investment philosophy has evolved over time as well. He used to be an old cigar butt investor where he would buy businesses beneath the market value that were generating a nice rate of return that were really you can't miss style businesses. I would equate that to some of the stuff that we had acquired yesteryear back in Virginia, if you remember Shady Grove, back in Georgia, Country Oaks, those sorts of businesses that were can't miss. We bought them so far beneath the market value that you couldn't miss it. However, as time goes on, we've moved away from kind of that buy, improve, and sell model more towards that buy, improve, and hold model where you're buying wonderful businesses at fair prices. And I think that evolution is something that we try to mimic, right? Warren Buffett's philosophy and what we do here. And Warren Buffett's not the only guy that loves mobile home parks. The best real estate investor of all time, Sam Zell, has been quoted as saying verbatim, trailer parks are the best real estate investment that has ever existed. They have a decent yield, high barriers to entry, solid demographics, a tenant base that remains with you for life, and tiny CapEx requirements. So, again, just being able to piggyback some of the smartest guys in the industry and seeing what they've done historically, once you discover kind of where they've been allocating capital over time, and you really dig deep into the macroeconomics of the space, truly the macroeconomic argument in favor of mobile home parks, it is fairly bulletproof. It's difficult to poke holes in why mobile home parks are a solid investment over the long term. And you know this better than anybody. There's been so much money that has come in after it's become a little bit more of a well-known asset class. 10 years ago, when we first started buying this stuff, it was overlooked and people weren't really digging into the space. Over time, it's become more commonplace, and a lot of the sharp money has come in. You know this better than anybody. Blackstone, Carlyle Group, Apollo, many others have put billions of dollars into the space over time. So, I mean, how has that impacted you on a day-to-day basis? Let me toss it back to you and hear your thoughts.
No, that's a great point. Just backing up real quick as well, mentioning Warren Buffett, I think a lot of folks, probably realize or recognize that Warren, owns Clayton, right? Clayton Homes. But I don't think that the majority of folks, unless they're in the business like you and I don't think they realize that he has such a large holding in the entire sector, not just the actual manufacturing side, but also in the lending of the home side. And then, with Berkadia, the lending of the mobile home parks side, the entire communities themselves. And so he's got quite a stronghold in this space. And so, again, I don't think a lot of folks realize that. But, to answer your question about, how has it affected me on the acquisition side of the business, these big groups coming into our space, I'm thinking back about 3 years ago. I think it was 3 years ago. Correct me if I'm wrong, Brian. We were at MHI out in Vegas. And we were it got invited to an after hours, I guess, party, you could say happy hour, what have you. And, we got to meet, one of the representatives from the Apollo group. And, we kind of looked at each other like, oh gosh, like even more money coming into the space, not just a little bit of money, not like $1 million here, $1 million there. We're talking, hundreds upon hundreds of millions of dollars, potentially billions of dollars from groups such as the Apollo Group and Carlyle Group, Blackstone, all these big PE firms. And, it's created a lot of competition. Competition is also a good thing. It makes it a little tougher to find, those higher quality deals, because a lot of times these private equity groups, they might not need to receive the type of yields that we might be expecting on a particular asset class. And so they might be able to pay more for a, particular property. And so it's created more competition, but competition is a good thing, because it's actually, it's created exposure, positive exposure for our space. I think the mobile home park industry it's been kind of dealt an unfair, hand of cards over the last couple of decades. It's always been carrying around this negative stigma attached with, how bad it is, the attraction of drugs, sex, and rock and roll to the industry, right? Like, that's what people thought of back in the day when they thought of mobile home parks. But I think that getting these more professional, institutional type of groups into our space has done a lot of positive things as well, outside of, creating competition for us on the acquisition side. But at the end of the day, like I always say, there's always opportunity out there. There's always deals to be had. You just got to be sometimes willing to dig a little harder than the next person. So that's kind of how I feel at this point in time.
I agree. And it's kind of a silver lining, right? I mean, all that capital is coming in. It's a good thing, right? Finally, institutional data has been compiled on the merits of the asset class. We've reviewed litany of data out there that's been put out, but Green Street's typically the one source that provides the majority of data, both on the private market and public market in the manufactured housing sector. And they've conveyed that mobile home parks have been the best performing asset class for decades and are projected to be the best performing asset class for literally as far as the eye can see through 2024. So, things have not changed. The macroeconomics of the space are exceedingly phenomenal. And while there has been a litany of capital come into the space, a lot of which has a lower weighted average cost of capital, meaning their cap rates are going to ultimately be compressed over time. That also has a silver lining. It can be seen as a good thing due to the fact that the asset class is now finally viewed as more of an institutional asset class. And for that reason, we can attract so much better agency financing than that which was available a decade prior, 2 decades prior. It used to be difficult to get a mobile home loan. If you go buy a mobile home park, it would be hard to find financing for some of these assets. Now, banks are yearning to allocate capital to this space because debt on mobile home parks has performed better than any other asset class. The default rate is negligible. And for that reason, the interest rates have dropped precipitously. Mobile home park interest loans, the interest rates on mobile home parks are now beneath that of multifamily properties. So there's always a silver lining. More capital comes in, a rising tide lifts all boats. For those that already have a nice portfolio of assets, we've seen a lot of equity come into the space over time, meaning sweat equity that has been created just due to the favorable long-term economics of the space. All phenomenal stuff. So we love every bit of that. But one thing that I also want to touch base on here that we have not yet discussed, all that stuff is great. And it's phenomenal to be able to generate a great yield and generate a nice rate of return. But ultimately, what matters is not what you get. What matters is what you keep. And one of the things that is often overlooked in this asset class is the tax benefits. Mobile home parks are remarkably tax efficient. For those unaware, commercial real estate is typically over a 39-year depreciation schedule. Residential real estate, be it multifamily or single-family residential, typically 27.5-year depreciation schedule. But anything that is a capital improvement is on a 15-year schedule, or personal properties lower than that at a 5-year schedule. And why that matters is due to the Tax Cuts and Jobs Act of 2017. Anything that's on a 15-year horizon or shorter has the ability to be pushed into the year one schedule via accelerated bonus depreciation. And because the majority of the purchase price of a mobile home park is allocable to those shorter lived assets of 15 years or lower, we can write off a massive percentage of the original purchase price of that mobile home park in year one. So real world example of how this actually plays out. If you're an active investor, you go out and you buy a mobile home park that's $1 million, about 20% of that is going to be allocated to the actual real property, the real estate. You can't depreciate that or write that off. But the other 80%, the majority of it, the vast majority of it, is allocated towards capital improvements, the sticks and bricks, the underground infrastructure, the roads, the curbs, the gutters, the utilities, all that sort of stuff, 15 years, which means you can depreciate that in year one. And via cost segregation studies, it has been our experience that about 70 to 75% of the total purchase price of an asset can be depreciated in year one. So while you buy a mobile home park for $1 million, it's throwing off real cold hard cash and cash flow. On your K1, you're actually writing off a massive loss. You're getting a massive loss on your tax return. And while it's great from an active investor's perspective, it can also be phenomenal from a passive investor's perspective. We have folks that invest in our funds that, I'm not going to say invest exclusively for the passive losses. You should never invest exclusively for the tax benefits, but it is a large reason why they decided to move forward. For folks that are doctors, dentists, high earners, professional athletes, things of this nature that might have high 6 or 7-figure incomes, real world example is a limited partner in our most recent offering. Somebody that invested $100,000 received a write-off of $108,000 in their year one K1. So dollar for dollar, that's exceptional. Meaning if somebody were to invest $500,000, they would have received a write-off on their K1, a passive loss of $540,000. And for somebody that's in a 40-50% tax bracket when you take into account federal and state taxes, they're literally saving tens of thousands, if not hundreds of thousands of dollars in year one, and we haven't even sent them a check yet for the cash flow or the equity buildup in the assets. So, I mean, there are so many things that are phenomenal about this asset class, and that is one that is often overlooked. So for those of you who are out there that are passive investors who have a very high earning job, often a W-2 job, and you have a spouse at home that is not working, you can often have them become what is known as a real estate professional. Specific terminology, feel free to reach out to your CPA. But so long as they qualify as a real estate professional, maybe they're handling all the investments in the household, the losses that they create from their job on an annual basis can offset your earned income and can truly create some remarkable returns for you beneath the line. So again, that's one of the things that is often overlooked. Wanted to get that out there because folks just need to know how powerful the asset class truly is.
Yeah, no, it's a beautiful thing. Depreciation is a beautiful thing, especially when you can have it on such an accelerated time frame. So no, it's one of our many favorite things about this asset class. And but I'm gonna kind of pivot back and forth a little bit here, Brian, and I want to make sure that we cover all these valid points. We speak to historically how well mobile home parks have done through, let's call it the Great Recession, 2008, 9, 10, the years following thereafter. COVID, we've been holding tight during COVID. Again, a lot of folks lost sleep in March wondering what the heck was going to happen in April with collections. And, across the board, we might have seen a slight downtick, but we've held really strong. In fact, one of the, if not the best performing asset class through this COVID-19 crisis. But what are your thoughts on what the future really holds for mobile home parks? We know they're not building any more of them. There's more, it's a diminishing supply. So there's more that are actually being torn down, redeveloped than that are actually coming new online. And so we've got a continually lowering supply year after year. And so what do you think the future really holds for mobile home parks? Just again, generally speaking.
Yeah, from my perspective, the sky is the limit, right? For decades, it was an asset class that was overlooked by institutional capital, and only recently has it become the darling of private equity over the last few years. And as more and more capital gets put into the space, it will become more and more well-known and more recognized as a viable option for local municipalities to create truly affordable housing for their residents. Now, it's unfortunate, but there have only been roughly 10 mobile home parks built nationwide each year for the last several decades. And time will tell how that shakes out. But within the stock that does exist, there are still a fair amount of vacant lots that are available inside of the mobile home parks that are currently already constructed. And it is very likely in time that as more sophisticated folks come into the place that actually have capital to allocate and dump back into the properties and reinvest into the properties, that they'll be able to bring in the inventory, bring in those homes, and add new supply of affordable housing to the local marketplace. So it's extremely exciting. It's going to help everybody involved. It's good for the investor. They're going to generate solid returns. It's good for the resident. They're going to get a very reasonable home. So it's a mutually beneficial business model, and it's something that I think is only going to continue to improve in time as more and more options become available, even to the mobile home renters themselves. Historically, there hasn't been a lot of financing available for the chattel, the homes themselves, but as more options are put into place, residents are going to be able to potentially get some assistance from the government, similar to that which the FHA helps out with the single-family residential space. Right now, a chattel does not get that same favorable financing. You might have a phenomenal 30-year loan that is an FHA loan. We don't have that ability right now in the mobile home park space. In time, that may come to fruition, and if it does, it would be just yet another phenomenal tailwind to the long-term economics in the space. So even without that, we just love the very basic and simple supply and demand imbalance, knowing full well that over time that the invisible hand, as defined by Adam Smith, will play out over time as long as you just buy good assets, allocate capital in prudent MSAs that have long-term favorable demographics. You then just let time do its thing and allow those favorable long-term tailwinds to play out.
Yeah, no, I agree with you, buddy. I think, one of the big things that I want to hit on here, and that's really worked in our favor, it's what we've done really well over the last, 8+ years of being in the space, is we've really played to the fragmentation of the marketplace. It is quickly getting consolidated. The more larger groups such as the Carlyle Group and Blackstone, big players such as that, the faster this space will get consolidated with no new supply coming on the market or limited supply coming on the market. It's only a matter of time, right? There's somewhat of a limited runway there to buy these quality assets, not necessarily before they're all gone, but just it's going to continue to get more challenging. But at this point in time, where we're at today, mobile home parks, I like to kind of compare it to what self-storage might have looked like, 20, maybe 25 years ago. Self-storage started out as very much a mom and pop industry. That's what it was. And then you had, one big player, Public Storage, come into the space, a second big player, third big player. Now it is very much an institutionalized asset class. There still are mom and pops in that space, but is nowhere near as fragmented as mobile home parks still are today. And so with that being said, there's still a lot of opportunity out there to buy from first or second generation owners that haven't necessarily maximized the value of their asset. They haven't had the capital to infill those vacant lots. They haven't kept up with the market rents. They have a lot of operational inefficiencies that are fairly straightforward and easy to fix. And so, one of the ways that's worked really well for us to not take advantage, but to, find benefits of this fragmentation is by going direct to owners, literally getting to know these owners, these first and second generation owners, building relationships with them and ultimately finding off market deals. And I think that's where a lot of the opportunity still lies today, Brian. Again, it's worked really well for our team and it's something that we do incredibly well.
I couldn't agree more. Every time that I speak with somebody who's brand new and trying to learn a little bit more about who we are and what we do, I always refer back to what we do best. I always say that going off market direct to owner is our core competency. And the reason is because you've been doing that your entire adult life. I mean, this is what you've never had a real job, Kev. I mean, ever since you were 18 years old, you've been a real estate investor. Prior to being involved in this niche, back in your 20s, you were in the single-family residential space, going off-market direct to owner, sending out direct mail, doing cold calls, door knocking, all that. Built up a portfolio of well over 100 single-family homes in your mid-20s. And then ultimately, when you realized you needed to get into commercial real estate, brought that unique skill set over to the mobile home park space. And a decade ago, there wasn't a soul that was out there doing that at scale in the mobile home park space the way that we do. And that was what makes us unique. So we have an advantage in that we've been doing this a long time, nurturing these relationships with owners in an off-market environment. And ultimately, a lot of the deals that we'll be buying this year, next year, the following year, we've been having conversations with these owners for multiple years, waiting for them to ultimately get to the point where them and their families are ready to sell. And we're ready and willing to help them resolve whatever their problems might be at the point where they're looking to dispose of that asset. It might be tax related. It might be estate planning. It could be income, supplementing income on the back end after they sell that asset. We have ways to try to help ensure that they maintain some of that income over time. I mean, it's about solving problems. And if you can do that in an off-market direct-to-owner environment, that's really how you can generate mutually beneficial deals for all parties involved.
Yeah, no, I agree. That's great stuff. I think it actually might be helpful. Maybe we kind of run through what what off market really means to us. I think there's actually there's a lot of confusion around that terminology. Just like there's confusion nowadays in the mobile home park and multifamily space with the value add. Like, what does value add really mean? And so off market to us, that truly means direct to owner. Off market direct to owner, where we're not competing against 5 other potential buyers. It hasn't been shopped to the mass marketplace. It is truly an off market deal. It's one that we've sourced through our own methods, a lot of times via a cold call, a direct mail, a text, or all the above, right? Something that we've been nurturing for many months, or a lot of times many years. There's many deals. I'll give you a case study here in a few minutes of a deal that we nurtured for multiple years before it came to fruition. And so again, off market to us means literally building a database of mobile home park owners across the U.S., a proprietary database that has taken us years to build that database and uncover all the cell phone numbers and home mailing addresses of each one of those property owners, and then building a relationship with that property owner. Now, a pocket listing, which is the terminology I think often gets confused with off market. A pocket listing is typically something that's brought from a broker. It's a relationship that a broker has built with a owner of a property. And then that pocket listing, it might not get marketed to the mass marketplace. It's not going to, you're not going to put together an offering memorandum and pitch it out to their 10,000 email list. However, it's still going to get sent to a slew of buyers. Maybe their top 10 buyers, maybe it's their top 20, what have you. There's going to be other competition for that pocket listing. And so again, pocket listing is very different than off market. Off market is very different than pocket listing. What we found is that off market deals typically are the ones that are the best buys. They're the ones that we can buy with a significant buffer of safety from where we're paying to what the true market value is. And a lot of that has to do with the proprietary database I've spoke to, something that's taken us years to build. And then not just the database, but what do you do with that database? Going direct to owners, how do you do it? Cold calls, text, emails, what have you. Organizing a system that allows you to do that in an efficient manner and at scale. And that's really what we've done. That's what we've kind of mastered over these years. In fact, I'll give you some statistics on some of our current cold calling efforts. We have a whole system in place for our cold call initiative. And these are some statistics from actually last week. We have approximately 20,000 total leads in our database, or total parks in our database. And last week alone, we made just over 4,000 dials. Okay. So dials meaning outbound dials. And out of those 4,000 dials, we were able to make contact with 411 people, meaning that 411 people actually picked up the phone, answered the phone. And out of those 411 people, we were able to set appointments with 24 prospects. Okay. Doing that day in, day out, week in, week out, month in, month out has allowed us to build relationships and rapport with hundreds upon hundreds of mobile home park owners across the country, and which has allowed us to buy very high quality deals at reduced prices and has allowed us to build a substantial portfolio utilizing those methods. And so, Brian, I don't know if you want anything else there to that.
It's just over time we've grown and been able to systemize this, and now we've got a full-blown call center in-house that we use to kind of drum up off-market deals. For ththose that are active, back in the day we used to just pick up the phone personally and cold call our entire list, right? That's how you get started in the space, and deals are still to be had doing that. But in order to get to scale, you've got to systemize it and really put some gasoline on the fire. Once we proved the concept, it was prudent to put together a full throttle call center to go out and build that top of the funnel deal flow. And as mentioned, right, that call center is the top of the funnel for us that will ultimately funnel those deals down. And when we say 20,000, those are 20,000 leads we would be willing to acquire. 20,000 more. There's more than that across the country, but those are the type and size and scope of deals and the specific MSAs we'd be interested in potentially acquiring. So we're obviously at the top of the funnel, nurturing those deals down, and on a weekly basis we'll get about 25 different prospects setting appointments on our calendar. And dependent upon the size and the scope of those respective deals, if it is a rather modest size deal, we might have one of our other acquisitions associates kind of field that initial call with the owner to just vet whether or not it would be a prudent acquisition for our team. But if it's 100 spaces or more, that is certainly worthy of Kevin's time to jump on the horn and talk shop. If I could have Kevin all day, every day, if you are on the phone with mobile home park owners, then everyone that's listening to this call, everyone that's in our team, I would say, of stakeholders across the entire board is going to do well. If all day, every day, Kevin, we're out there talking to owners, mom and pop guys that have been in the industry 20, 30, 40 years. You love those calls, and we love when you have them, man. So that's the best. That's literally the best.
No, they're fun. I enjoy it. In fact, I'll give you guys an example. I think it would be prudent to share an example of a couple of deals that we acquired a few years back. It falls exactly in line with the strategy that we're speaking to. Now, these particular deals were sourced. One was sourced via a direct mail letter. The other was through a broker. But even the broker deal, we continually, Brian likes to say I harassed the owner. I didn't harass the owner. I basically stayed in touch with him on a regular basis. Both of these deals, they were within 10 minutes of one another, 90 lots apiece, 180 lots in total. They're in Maryland. And both of them were first generation owners that had built these communities, or their parents had built the communities. So I guess you could say second generation. But it was in the family. It was in the original family. They had both owned them for 50 plus years, long-standing owners and operators in that community. And we were able to acquire both those communities, really high-quality assets. We acquired them both combined at $2.6 million. And we were to execute our business plan, which consisted of doing some rent increases, doing some improvements in the community, bringing some homes into the communities, creating some efficiencies within the operations, getting some good solid on-site management in place. And within a 2-year span of time, we're able to refinance and pay back all the original investor capital from the proceeds. In addition to that, these parks appraised, the two together appraised for over $6 million. And so again, shortly 2 years after acquisitions, we were able to get all that investor capital paid back and then essentially add more than $3 million of value to these two communities. And there's no way, Brian, there's no way that those deals, if they would have been put in the hands of a broker, I love brokers. I love all of you that are listening. But if they went out to the mass marketplace, there's always someone willing to pay a lot more for those same respective deals. And it would have pushed the price up significantly if they would have gone out to the mass market. And so the direct to owner marketing strategy, it works, guys. It works well. And it's how we've built our business.
Yeah. I love the fragmented niche because it creates an imperfect market. For example, if Kevin is having a one-on-one conversation with an owner that's been, managing this park for 30, 40, 50 years, whatever the case may be, and I don't know how that owner is going to drum up exactly what disposition price he would like, but whatever his idea of that disposition price might be, call it $5 million. If we feel that asset is, worth probably $5 million or just subtly beneath that, but we go ahead and make an offer of $4 million, then there's $1 million gap. And Kevin is typically pretty good at winning those negotiations in off-market transactions where we're going in at what we feel is an acquisition price that is beneath the current market value of the property, not even the intrinsic value. The intrinsic value of the asset is significantly higher than that. But we think even if we bought it on day one and we sold it on day two, we would make a reasonable margin right there just based on the fact that we're going in with a nice margin of safety right at acquisition. So that's been one of the traits that we've really shined in over time. To really hone in on what I mean when I say an imperfect market, you can envision Wall Street being a perfect market. When you're trading the stock ticker AAPL, if you're trading Apple stock, there's millions of dollars on the buy side and millions of dollars on the sell side. So at whatever that price is, you're likely to be right at that market equilibrium, whatever the true market price is for that asset. However, if you're in an off-market environment, it's an imperfect market. So if the seller wants $5 million and you're willing to pay $4 million, well, there's a massive margin there, and it's up to Kevin to try to navigate exactly what is a reasonable purchase price to pay that we feel is, again, beneath the true market value of the asset. And Kevin, you've just done such a good job of that. You've literally been doing that for over 20 years, and it's why we appreciate when you spend time on the phone with owners looking to navigate those conversations.
Or having dinner with them and their families at their dinner table.
At their house.
I've got some fun
Whatever
stories.
lengths need to, get on a red eye, get in there and go break some bread with the family and see what you could drum up, bud.
Yeah, that's it. Well, the example I gave there, that Cedarhurst and Walsh, we've got many others like that, but those were a couple years ago, and so the times have changed. So, but I'll give you guys a good example. We just ramped up our marketing efforts. We have not taken a break here, but we did, hit the pause button the first quarter of this year just to see how this COVID COVID situation would play out. And we wanted to make sure that our existing assets were well in control and that, we were managing our communities, managing the residents, working with the residents, what have you. But a couple months ago, we hit the gas again in a big way, and we started really doing a big push on our outbound marketing efforts. And just in the last couple of months, we've been able to tie up a number of properties, one up in the north of Atlanta market, the 76 space park that we have under contract for $2.2 million. Very straightforward, simple value add component, basically billing back the city water into the city sewer, raising rents up the market, and then infilling 8 vacant lots. It's a very straightforward, clean community. We found that one via cold call efforts. Okay. It's an owner that's owned for 12 years. He's just been liquidating his mobile home park assets. This is the last one. I wish we would have met him a couple months ago because maybe we could have bought another one from him, but it's his last one. He's kind of aging out of that side of his business and looking to unload his assets. Again, there's always the right time and place when someone either needs or wants to sell, and our objective is to get in front of them when that time comes. And in this situation, we reached him at the right time when he had already made that decision. Now, the exciting part about this particular deal is that once we stabilize that particular property, we estimate that this asset will hold a value of somewhere between 2.8 to $3 million. And then in addition to that, it will be an agency quality asset. So if we decide that we want to tie on some Fannie Mae debt, non-recourse debt to it, we'll have the ability to do so. In addition to that deal, we've got a 317 space institutional quality mobile home park in Louisiana that we have tied up for $5.8 million. Again, the value add component on this one's pretty straightforward. We like the deals that are straightforward, right? It's, get in, raise rents to market rate, infill any vacant lots, and clean up any operational inefficiencies. On this Louisiana deal, it's even more straightforward than that. It's basically rents are below market by 25%, and it's got some vacant lots that we're going to infill. Overall, the community is in phenomenal shape. Concrete roads, concrete parking pads, very well laid out, absolutely beautiful community. And that deal was sourced from an existing relationship that we've had for multiple years with this particular owner. And then the opportunity here that we see, and again, the exciting part is that once we execute on that business plan and we stabilize that property, we estimate that the value is going to be somewhere in the 8 million plus range. And so add a couple $1 million of value. I think we'll all be happy if that happens. So we're looking forward to that deal. Again, very, very nice quality property that will also qualify for agency debt once we've executed on that business plan. And, Brian, we got really one other deal that we have under contract. We've got a lot of others that we have working and active negotiations on. So I'll run through this last deal up in Maryland. Again, we like the Salisbury Eastern Shore part of Maryland. We own those 2 assets, Walston and Cedarhurst, already up there. And so this third park I'm going to mention to you is actually, it's literally within 30 minutes of those other 2 communities. So it's a little smaller than what we typically buy, but it's a nice plug-on community to those other 2 that we already own. And we've got phenomenal on-site management at those 2 communities that we'll be able to, again, tie together with this third asset. And so it's a 57 space park. It's in Federalsburg, Maryland. We're buying it for $1.5 million. Again, very straightforward value add plan. Rents are 30% below market, and there are 10 vacant lots that we intend to infill. Again, this was sourced from a long-term relationship that we've had for many years. And we're excited about this one because once we stabilize it, we estimate that the value is going to be somewhere in the $2.2 to $2.3 million range, and also will qualify for a small balance agency type of loan program. And a few of the other exciting aspects of that park, Brian, which is very rare that we come across. I'm not going to say rare. Rare is probably the wrong word, but whenever we come across an asset that's got direct build city water and city sewer, city-owned streets that the city maintains, and also city-owned water and sewer lines. Basically, there's never a point in time where we'll have to fix a pothole. There's never a point in time where we'll have to plow snow. And there's never a point in time where if the water line breaks, that we'll have to fix it. The city will handle it all, which is a beautiful thing. And that's how this Maryland park's set up. So I'm excited for those aspects of it. Yeah,
I couldn't agree more. Excited about these 3 deals and more that we have working in the pike. But I mean, it's nice to have a couple that it's a simple and repeatable business model, right? This is straightforward, down the fairway, similar to a litany of deals that we've done in the past. And we're just excited to begin enacting the business model on these 3 respective assets in the not too distant future. We'll end up closing on these in the next few months. So ultimately, that kind of leads me into the next phase here. And as you guys know, if you've already been in our email list or on our short list, we've gone ahead and conveyed to you that we recently launched Fund 3. It's kind of been in the works here for a couple of quarters and just launched it about a week and a half ago. We've already had a couple $1 million come in, and we're thankful to all of our historical investors who've re-upped with us and decided to move forward in Fund 3. Thankful to all of our new partners who are looking to continue to build cash flow and build legacy wealth over time with us, but would welcome the opportunity to have some conversations with you guys. If this resonates with you, if you guys want to go out and buy mobile home parks yourself, the asset class is phenomenal. We'll do our best to help you out along the way. We've provided hours and hours of free content on this podcast and many, many others to try to turn our business model inside out and help you guys grow your net worth for you and your family. But if being active is not something in which you're interested, but you still want to get some exposure to the space, more than happy to try to help you and your family along the way. So in any event, excited about where we're at and looking forward to continuing to grow here, Kev.
Yeah, and just to kind of add on there, Brian, for those that are interested, whether it be passive or active, we're always here to help you. Again, we've been putting hundreds of hours out there of content over the years. We really enjoy educating folks on this asset class, and again, what it is we're doing in our business, sharing the details of how we build our business and how we structure things. And for those that aren't aware, I offer a 30-minute phone call each and every Friday. I set aside like 2 or 3 time slots on my calendar, and I've been doing it for going on 6 years or over 6 years now. It's been a long time, right? I've lost track. That's how long it's been. And I've spoken to hundreds of you. And this is a way for me to give back. And this is a way for me to connect with you, to help you wherever you're at in your journey of being a real estate investor. So if you have any questions, again, whether it's about, our group working with us or just mobile home park investing in general, you can always reach out to me as well about scheduling that 30-minute call. Brian, one other thing before we kind of wrap this up here for the day, I think that we should definitely hit on, given the fact that we've got Fund 3 already actively rolling, we're bringing capital in, but, we closed our first transaction literally last week. I wish I had a bell here to ding, or I said some sound effects or something, but I don't. This isn't that cool of a podcast where we've got a sound effects board or anything, but, we've talked about mobile home parks. You guys have heard us preach about this asset class for many years, but one of the other asset classes that we're equally as excited about and have been for multiple years and just have decided to also spend some energy focusing on finding deals is in the parking space. So surface parking lots and potentially parking garages. And we actually just closed on our very first parking asset last week, which is it's a small surface lot in downtown Wilmington, North Carolina. This is a historic part of town. It's where all the prime restaurants are. It's where all the tourists are driven. When you enter into Wilmington, everyone goes to downtown historic district. And this is a lot that we found by going direct to owner, using the same strategies that we use to find mobile home parks. We used a direct mail on this particular one. We really liked the downtown Wilmington market. And so we put together a database of parking lots that exist there, mailed to all the owners, and received a couple calls back. And this one turned into an opportunity. The value add component here on this particular deal is that we were able to sign a long-term lease with a national operator at $72,000 annually. And the prior owner that we purchased this from, he was only receiving $30,000 annually. And so that's exciting. The reason why that's exciting is because we paid $695,000 for this surface parking lot. And with a $72,000 lease, you guys can do the quick math there, but that's right around a 10% unlevered return on an ultra prime piece of real estate in a highly desirable market. It's at a hard corner, signalized intersection, and has a future development opportunity to it. That's not why we bought it, Brian. Again, we're not speculators. We don't buy things to speculate. We buy things for cash flow. That's why we buy mobile home parks. But this particular parking asset, it's cash flowing from day one. And there's potentially icing on the cake, as I like to say, with a future development opportunity, maybe 5, 10, 15 years down the road. So I don't know if you have anything you want to add there about the parking lot, but I'm excited because that's just it's another piece of our journey as we continue moving forward here, as we continue sharing, all this exciting things with our listeners. And most folks don't think of parking. Now hopefully they will.
We feel like we were ahead of the game in the manufactured housing sector a decade ago. And, look around. I mean, you guys listen to a litany of podcasts. There's not a single soul out there talking about parking lot investing. We're ahead of the game in this asset class as well, and it shares so many characteristics to manufactured housing: favorable long-term economics, recession resistant, fragmented niche. It's an area where we can create off-market transactions, and we have the ability to invest for cash flow and legacy wealth with a nice buy, improve, and hold model. A lot of things that are phenomenal there, and it allows us to take advantage of our core competency. Again, the vast majority of owners in the parking lot sector own only one asset. Very, very similar to the mom and pop nature of manufactured housing. That's exactly what we found in the parking lot space, and we're excited to utilize our call center and our unique off-market tactics to go out and scale in the parking lot industry as well. I should note this, right? In Fund 3, it's a mobile home park fund, but we have reserved the right to go out and buy parking lots. And as Kevin said, look, while about probably 75 to 80% of the capital is ultimately going to get allocated to the mobile home park sector, we want to be able to buy parking lots if and when they make sense for all of our partners. And this deal in Wilmington, when we can look at it from a 10,000-foot view and know that this is a beautiful, unlevered 9.5 cap going in an exceptional MSA with a guaranteed 10-year double net lease, we know that we're in a pretty good position there. We don't have to get so unbelievably granular to, quote, make the numbers work on this deal. We know that it's going to perform quite well over time. So we want to reserve the right to buy parking when it actually comes across our desk, and we know that the risk-adjusted returns we're going to be able to provide for our partners meet and exceed kind of the thresholds that we've laid out historically in the mobile home park sector. But in any event, love parking and looking forward to continuing to build our portfolio there.
Yeah, good deal. So, Brian, we covered a lot of ground here today, and I'd like to work towards kind of wrapping this up here. And if you could, maybe for those folks that are listening, that if they want to learn more about what we've got going on with Sunrise, if they have an interest in maybe learning about our Fund 3, or just again getting some more insights as to our company and what it is we do, what's the best place for them to kind of dig in and learn more?
Yeah, of course. I mean, this is a Reg D 506 offering for accredited investors. And if you fit into that category, you're somebody that aligns with our investment thesis, our business model resonates with you, it's something that you feel might be a good fit for you and your family, again, we'd welcome the opportunity to have a conversation with you to see if we'd be a good fit to work together. You can head to investwithsunrise.com. We put together this landing page where you can request access to the full investor presentation for Fund 3. Again, investwithsunrise.com. Once you request the full investor presentation, it's about a 40-minute video that'll walk you through the fund structure. You can download the entire offering package, executive summary, PPM, operating agreement, all the different stuff that's out there for all the litany of syndications. And if you have any questions, we would welcome the opportunity to talk shop. On that same landing page, you can schedule a call directly with me on my calendar. And ultimately, should you decide to move forward, we've done our best to make the process as simple as possible for you. We have an electronic subscription process, which takes about 2 to 5 minutes to complete. So again, when you're ready to invest, simply click the Invest Now button on the investor presentation page. It's an online investment process, which takes about 5 minutes. And again, if you have any questions or need assistance, don't hesitate to ask. We'll do our best to help facilitate the transaction any way you so desire, right? We welcome the opportunity to try to help you generate more cash flow and build legacy wealth over time for you and your family.
Yeah, awesome, Brian. As always, man, you always bring the fire. I need to get you on more often. Just for those that don't realize it, Brian's the brains of the organization, so I need to get him on this podcast more often. And buddy, I appreciate you joining me. Seriously, I'm glad I was able to persuade you to come on here and just share your wisdom and knowledge of the space. And again, it's fun, man. We need to do this more often.
I agree. No, we definitely need to do this more often. I'm much more of a podcast guy than a video guy, right? You're the face of the franchise. You're the pretty boy. You can do that. I can sit behind the scenes, and you could take all the credit out in front and center, buddy.
Good deal. Well, man, I don't have anything else. You got anything else before we say goodbye to these folks?
No, I don't think so. Just everybody, I hope you're having a great 2020, and we look forward to continuing to have conversations and try to provide you with as much value as we possibly can along the way, be it on the active or passive side. Again, wishing you and yours the best.
Alrighty. You guys take care.
Congratulations for taking the necessary steps to achieving massive success through the highly lucrative niche of mobile home park investing. Be sure to visit our website, mobilehomeparkacademy.com, to download your free digital ebook version of the 21 biggest mistakes investors make when buying their first mobile home park and how you can avoid them. And while you're there, be sure to subscribe to our free monthly mobile home park investing newsletter, which is jammed full of valuable tips, tricks, and strategies to help you accelerate your path to success as a mobile home park investor. More information about this podcast and its hosts can be found by visiting mobilehomeparkacademy.com.